Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Monday, December 1st, and my name is Raleigh White. I'm coming to you live from a cold, rainy day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on weekly cash flow. Specifically, in today's agenda, he's going to talk about how to find good stocks for credit spreads. He's also going to talk about why he altered how he does credit spreads and what the results have been since he's done that. He's going to share new trades that will be added to the weekly cash flow program. He's going to talk about why diagonal spread trades offer a major edge, how diagonal spreads are similar to time spreads, and finally, why diagonal spreads can successfully be used, in particularly after earnings have been released. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone, and we do have some ground rules. Number one, always be kind and supportive in your posts. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. And finally, folks, please keep your side conversations to a minimum so that so the rest of us can basically hear what Roger has to say, because after all, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 a.m. sharp Eastern Time for Roger's pre-market briefing, you'd note that there were several key catalysts that we need to be aware of today. On MAGs, we saw that Tesla and Meta were both down 1% coming into the open. On chips, Marvell and AMD were also down 1%. On the crypto front, Bitcoin is down 5%, and that's having a big impact on related stocks, including Coin, Mara, and MSTR. And finally, folks, on the Fed front, we have PMI, ISM, and construction reports coming out right around 10 o'clock today, and we also have a 20-year bond auction. Now, for those of you that are wondering, hey, why are we looking at catalysts? Why do we even care? Well, why am I talking about them now? Well, from Roger's perspective, once again, he's very, very keen on information that is either known or will be known during the trading session that could have an impact on our decision to trade stocks. And from that perspective, each one of these catalysts represents a volatility flashpoint that we just need to be aware of. Now, on the small cap front, we noted that Roger had 6 tickers that he gave us today. QTTB, DYAI, PRPH, AHMA, BLUW, and FTEL. And let's shift over and let's see how these guys are performing this morning. And once again, kind of interesting news here on QTTB up here in the upper left-hand corner. This was a successful trade. We can see here right at the open of the market. By the way, I'm looking at 15-minute bars here. We can see that the pre-market high was right at $5.05. We got our hit here. A 15% move would have been here at $5.81, and we could see that it moved all the way up to $6.37. So this is a nice little trade to get started today. Now, right next to this, we have AHMA, and the pre-market high was $13.33 on this one. Roger wasn't sure what the level was going to be when he gave it. He said, let's go with the pre-market high, 1333. We can see here on the third bar of the day, once again, we came through that level and we moved all the way up. The 15% gain level would have been at 1531, and we went as high as 1734. So a nice little win there on AHMA. Now, next to that, we have DYAI, and the pre-market high is just $1.29, and we can see that prices kind of opened up here at about $1.18 seen and have been drifted lower as volume is falling off. I don't think we're going to see a hit here whatsoever. In the lower left-hand corner, we have BLUW, and we can see that the pre-market high here was $10.50, and it opened up right here at about 1034, and it's just stayed there. I mean, really nothing going on there. I'm not sure if we're going to see any activity here. Next to that, we have PRPH. The pre-market high here is 35 cents, only 35 cents. And we can see once again, the market opened up here around 21 cents and has been drifting lower. Really nothing here of significance. Now, interesting here, finally, we had FTEL, FTEL. The pre-market high on this was $1.44. Okay, and we can see here that on the 1, 2, 3, 4, 5, on the fifth bar here, we broke through that level. So we got our hit. A 15% move would be up here at $1.66. We went all the way up to $1.60 and moved down in this direction. Stop loss would be also 15% at $1.22. We bounce up in this direction. Folks, if you got into this trade as we move to $1.60, I hope you were able to get out and take some profits here. Some people take it at 10%, which would be good. Move your stops to break even. From my perspective, as I track it, this trade is still alive. We came close here, but it was a nice hit, had a nice little move, dipped below the entry, did not hit our stop loss. Coming back up into this area, we'll see what happens. So coming back to the rest of the presentation, before I leave the small caps, I just want to let people know that Roger's selection process is based not only on price action, but primarily on extreme pre-market volume. He wants to see heavy volume on a small cap stock to consider it for trading. Also, remember that small caps are their own animal. They're not driven by institutions. So from that standpoint, they're not impacted by the things that we normally watch the market around. For example, like the catalysts I just mentioned. Also, folks, if you get into these trades, only trade the small caps during normal market hours. And if you don't have a fill by 2 p.m. Eastern time, take the trade off. It's not worth the risk. And oh, by the way, if you do get a fill on a small cap stock, please do not hold it overnight. It definitely is not worth the risk of doing that. Now, as far as Rogers' large caps are concerned, we noted that there were several large cap stocks that he shared with us. He pointed out that he only had 4 on his short list, given the fact that the market is basically directionally pretty bullish. But he did list MNDY, CBZ, ACM, and on MENS, MENS, he put an asterisk there indicating that this was looking like a good A-line to the short side. As far as longs are concerned, pretty heavy today. There were 13 of them that he was looking at, everything from Cisco and Apple and Warner Brothers and Walmart and Coca-Cola, Applied Materials, GM. Once again, some pretty strong stocks here, all setting up and looking like they could be decent longs for today. Now, as far as Roger's closing comments were concerned, we did note that the futures markets were down pretty heavy coming into the open across the board. He also noted that bonds were at the low end of their range and that the VIX was a bit higher, but still trading below 20. This kind of concerned Roger. On the flip side, though, if we looked at the pull to call ratio, it's definitely out of balance with the bulls kind of ahead of themselves, all right? We also noted that the sector rotation was favoring speculative stocks, also pointing to and supporting the potential for a bullish move in the markets. When looking at the SPY, the RSP, the QQQ, the MAGs, the SMH, we noted that all were trading right there below major resistance. And his hope was, that when bonds would hold on, move a little higher, and then push everything higher above that level. From that perspective, he wouldn't be a bit surprised if the markets do trade, a little sideways today. He's hoping that there's going to be some consolidation, form a base and a foundation for the next bullish cycle. That's what he's hoping that he sees. But it is Monday. He recommended doing nothing before the reports came out at 10 o'clock, to be extremely careful, folks, and to watch bonds and the VIX. Wasn't quite sure we're going to see much volatility today. Once again, just hoping for consolidation, form a base and a foundation for the markets to move higher. But for that to happen, the bonds and the VIX have to play game. And at this point in time, they're not doing that. So let's keep an eye on that. So once again, great turnout today. I hope everybody had a wonderful Thanksgiving. I certainly know that I did, and we've got a terrific session on tap for you today. Roger's going to be he's going to be focusing on weekly cash flows. He's going to be talking about how to find good stocks for credit spreads. He's going to tell us why he altered how he does credit spreads and what those results have been. He's going to share with us the new trades that will be added to the weekly cash flow program, why diagonal spread trades offer a major edge. He's going to talk about how diagonal spreads are similar to time spreads, and why diagonal spreads can be successful after earnings, and any other questions that have come in the mailbag over the weekend. So with that, folks, let's say hi to Matt. Let's say hi to Roger. Guys, once again, nice to see you all, especially after this wonderful Thanksgiving. I hope that you all had a great Thanksgiving. I certainly know that I did. So, gentlemen, they're hiding, guys.
Can you turn on so I could hear him? Because I can't hear anything.
Yeah. Hey, Roger. Roger. We hear you, buddy. So, guys, we're having a little bit of technical issues that we'll get sorted out pretty quickly here. Testing 1, 2, 3. Roger.
Let me go to here.
By the way, folks, this is not Roger's first rodeo. Anyway. Yeah, I know. He's saying he can't hear me. He's talking with Matt, and he and Matt will get things going.
My audio is not working. Can you turn yours on over there so I could hear it?
Yeah.
Well, as loud as I could hear him.
Hello,
hey, Raleigh,
hello.
I'm experiencing some sound issues. I can't hear you.
What? Well, that's a shame.
So Matt's going to turn on his speakers so that I could hear you, and then I'll try to fix the problem later.
Okay.
Because I can't hear you.
Okay.
Which is not good. So one
Well,
second.
I've been saying nice things about you.
Turn it up there, Matt.
Hello. Let's see. Can Matt hear me?
You can't get your audio to work either? That's very strange. That's neither of us can get our audio working. That's really weird.
That is awesome. That is weird.
Strange, very strange. Yeah, I'm going to log back out and log back in. Maybe
I think that would be good. I think that would be good. And I'm here with you folks. And, while Roger's going through that, let me just, once again, for those of you that came a little bit late here, let me just bounce over and share my screen, because I want to talk to you a little bit about how the small caps did today, because Roger gave us 6 tickers and 3 of them hit. So QTTB hit. So we got our hit here. It made a nice little move, the 15%, which would have been a profit target for us. It blew right through that, went as high as $6.37. The open was $5.05. Another small cap that hit was AHMA. The overnight high was $13.33. We got our hit here. The 15% profit target level at $15.31, blew through that to $17.34. So that's nice that occurred. And the other one that hit was FTEL. The overnight high was $1.44. We hit that. The profit target of 15% would be at $1.66. It went up as high as $1.60 and kind of turned around. The stop loss here at 122. So for those of you that may have gotten in this trade, you might have taken some money off at 10% or whatnot. But I kind of the way I track these small caps, I look for a 15% hit for it to be a profitable trade, and it's come back. The stop loss would be $1.22, so we're sitting right down here. Hopefully that will turn around for us. But hey, 3 out of 6, 50% on hits. That's pretty darn good. So once again, I'm glad that has worked out for us. As far as the rest of the program is concerned, we've got a great agenda on tap for you today. We're going to be focusing on weekly cash flows, and Roger's going to be talking about, how to find good stocks for credit spreads. He's going to share how he changed the way he does credit spreads and what the results have been. And this is a pretty incredible story. So I know you're going to want to hear that. He's going to talk about some new trades that have been added to the weekly cash flow program. He's going to talk about why diagonal spread trades offer a major edge. And he's going to be talking about why diagonal spreads are similar to time spreads and how they can be particularly successful, especially after earnings. So right now, folks, Roger and Matt are having a little bit of technical issues trying to hear me and take over the program here. And Roger has signed off and he's back on. So we'll get this sorted out.
I got Raleigh in my ear now.
And you know what? How you feel about that? That's a good feeling, isn't it, Matt?
Crazy, it's free.
Hey, how was your Thanksgiving? Did you have a good one?
Yeah, I was pretty sick, but
Oh no.
yeah,
All right.
still had a good time.
All right. I could hear you guys, but there's going to be echo. Now, I got you from my side, so every time I talk, I hear myself. Weird, but I can hear you at least now.
Okay.
So what I'll do is after you and I stop talking and I'll start doing my own thing, I'll just mute this. It'll just be me in the audience. It'll be just easier this way. Because I can hear
buddy.
Matt. He's right here in this room. The only problem I can't hear you is you, Raleigh.
Well, I tell you what, I've just been saying nice things about you, Roger, and you missed it all.
Well, thank you. I do appreciate it. Very, very nice of you. All right. So I'm going to mute this right now so I don't hear myself talk, and I'm going to start analyzing the markets. And if I see you coming up from air, and we'll fix this as soon as we're done with this broadcast. I just don't want to, mess this up.
Sounds good.
All right.
I can hear you too, so I can interject.
Yeah. If you say anything, Raleigh, and I can't hear it, Matt will interject and tell me. Okay.
That sounds good. Well, I will say this, Roger, and then we'll.
So you could hear him, Matt?
Yeah. So
All
Matt,
right,
just
good.
share with Roger
so here
that
we
three
go,
of the
folks.
small caps
On
hit.
Roger.
Yep.
What were you saying, Raleigh?
I was just going to say, just to share with Roger, that 3 of the small caps hit this morning.
Oh, see, 3 of the small caps hit this morning, Roger.
And how are they doing?
They all did well.
They all did well.
Oh, good. Excellent. That's what I wanted to hear. And thank you for that update, Raleigh. I appreciate that. All right, folks. So let me talk about the market a little bit. I was going to, so just so you know, what I was going to do today was I was going to go and talk about the Pro Trader dashboard, but I found out that a lot of people were upset because they missed the Wednesday, the holiday, the data miner that and the weekly cash flow deal that we had. So because it's Cyber Monday, I'm going to talk about it again today, and I'll talk about cash flow, and I'll talk about weekly cash flow, and I'll talk about profit targets. Matt, maybe you want to try to fix this, or do you want to try to fix it later after I'm done?
I can try to fix it now.
Yeah, try to fix it now so that we could see what the hell's going on, because this is not good. I'd really love to be able to have a normal communication with Raleigh. I don't want you to get involved here. I thought maybe from the hardware I was saying, the hardware side. Yeah. And if not, we'll just do it afterwards. But it's very strange. So anyway, starting off my analysis, I was very concerned with the bond market this morning, and the bond market came off right here. As you could see, this is really not good at all. We're right at the bottom of this range, and what this is telling us is that bonds interest rates, the odds of interest rates going lower is not that great. All right, not great at all, as a matter of fact. So we have to be very careful and very cautious here. If you look at the VIX, though, the VIX is actually coming off a little bit. So this is a good sign right here. This is positive. Okay, I wouldn't focus too much on the negative over here. I think this is okay. The market's not reacting negatively to it. And if you look at market internals, they opened down quite a bit, negative 1400. But if you look at them right now, they're actually looking pretty good. They're only negative 192. And Vold is, although choppy, it's starting to look pretty good. Starting to look pretty good around here. So um, I'm not really that disappointed, and I'm not really that upset, and I'm just being very cautious, and I'll show you why. I'm being extremely cautious because of this, of this. Um, and in a nutshell, I gave this morning a couple of scenarios. That's Matt messing with the speaker box there. Um, and the first scenario was, you could see right here is nothing. Oh, okay. Okay. So the first problem is this: how low is this going to go? Is this going to completely undo like this? Is this going to completely undo what we built, or is this just going to come down to the 8-day EMA? I like the fact. That we are. I like the fact that we are right now consolidating around here. You know what, Matt? I'll be able to hear you if you say something too on the thing.
Yeah. Let's see.
Let me see what settings is on right now. I don't think I want to deal with this now, but just in case.
We'll know pretty quickly.
Say something?
Testing.
Nope. Nothing. Weird. Really weird.
That is weird.
Very strange. Very, very strange. Okay. We'll have to figure it out later. We'll have to go later. That's really weird. Maybe we need to update the computer or something, Matt, or update Zoom. You'll have to look at it.
I'll figure it out.
Yeah, you'll have to figure it out. That's an interesting one. So, but we've bounced back pretty well, and I like what I'm seeing right here. So overall, I do like the direction of the market in terms of what we're seeing intraday, but I'm very cautious and I'm very skeptical that the market's going to go higher without a little pullback. So the big question is, and really this is all it comes down to: are we going to flag here? Is this going to be like a flag where we come down maybe up to here, which would be the 8-day? By that point, the 8-day will have caught up to this bar right here. Are we going to stay in this little range here for a little while, or are we going to really break down, back down to the 50-day and go below that? We got to be really, really, really cautious. Really, 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 really cautious here, because this could be a major problem. This could be a major problem, or it could be nothing. But I'm going to be very cautious, and I'm not going to initiate any major positions till the end of the day, till I have a better feeling on this. Also, remember this morning, I warned you. Here, I warned you that the number of stocks was 375. I said it's not too much. It usually gets into the 400s, but I said be careful today for all the other reasons, and I already mentioned this. And now we're at 280. And this morning we only had 16 stocks breaking down. Now we have 50. So we have to be really, 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 really cautious right now that this doesn't come back all the way down and materialize. Okay, really, really, really cautious. All right. With that said, yeah, one more thing. Sure. Sorry about my computer problems, folks. And good morning and good afternoon, everybody. I apologize. I'm just opening the chat so I could say hello to everybody. I do apologize about my issues, but we'll figure it out. We'll figure it out. We'll solve it. We'll get behind it. All right. All right. Put the call ratio. I showed you this morning right here. And I showed you how to put the call ratio. And there you go, Bob. It's weird. It worked fine before. I was showing you the put the call ratio, and I was showing you this morning how we were down here. This usually means we're overextended to the upside. So that's another reason why I'm very cautious today. Very, 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 very cautious today. Extremely cautious today. Okay? Point is, if you have exposure right now to the upside, be extra, extra careful. Be extra, 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 extra careful. I meant this morning about Omar's trade. Is that going to push out? I'm going to do that when we talk about the Pro Trader dashboard tomorrow, Walt. Yeah. Okay. And Omar's trades are very similar to what I do in the Pro Trader dashboard, which is why we do that together. Okay. All right. Now, what I want to talk about right now is I want to talk about the two type of trades. Now, I don't know if you guys were here on Friday. Most of you were here on Friday. Some of you were not here on Friday. For those of you who were not here on Friday, we launched a new surprise. I gave you guys a surprise, and we're going to talk about it again. They're called diagonal spreads. And I'll explain to you why and how they came about and how they, in a nutshell, I'll explain to you how they work. Here, let me find a smooth stock. That's a pretty smooth stock. Okay, let's just go right here. That's perfect. So let me explain to you one of the advantages of trading income in this market right now. If you look at the SPY, and I really want you guys to pay attention. This is important. This is the equal weighted SPY. For the last several months, we have been in this chop. We haven't gone anywhere. Now, we haven't really broken down. I mean, if you want to call this a breakdown, there's a one-day event, although I don't like the size of these bars. But we did recover pretty quickly. The point here is that we haven't gone anywhere. The market hasn't gone anywhere, which makes swing trading really, really difficult. Now, it doesn't make it impossible. We've been doing pretty well, but actually doing better than pretty well. But this is about as hard as it's going to get. Doesn't get much harder than this. Why? Well, when you have directional bias, when you have this happening over time or this happening over time, not over 4 or 5 days, over time, you get momentum, you get the tailwind. It's like sailing and having a 60-mile wind in your back. It's easy to get somewhere, okay? But when you have a market like this, and in this case, it's not going anywhere, but at least it doesn't have any volatility. But now it's starting to gain some volatility. It's not going anywhere. That's the most dangerous kind of market because you have wide range, but you don't have it actually going anywhere. Okay. Now, with that said, and again, with that said, the best way to trade this market is to be very, 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 very picky, as we have been across the board. Be extremely selective with the trades that you choose and trade income strategies. Now, let me give you a couple of hypotheticals, okay? And we'll talk more about this in a bit. But, I mean, the cat's out of the bag. So let me explain to you something. You see you see this price action right here? Notice how often notice the majority from here, let's start right here. From right here, all the way right here, all we've done was just trade either right at the moving average, slightly above the moving average, and if we have, it's only lasted about a week, and then we come right back down. A day or two, come back down. Basically, this whole time right here, we haven't really done anything. Now, you could day trade, you could scalp, you could play around with it. That's fine. But let me show you a couple of different ways to trade this, okay? So let's say you find the stock that's just kind of doing this right here. Or kind of doing this right here. Kind of doing what this stock is doing, okay? Not this is getting a little too uppity, but let's say right here. Right here, okay? What if, now follow along, okay? Follow along. I'm going to show you guys something. Show you guys something really cool. Let's say, just pretend, okay? We're here. We're here right now in time. I don't know. This is like 3 months here. It's August. We're in August, okay? And we go all the way to October. We're in August. We're going to October, okay? Right here. And we buy a put. Okay? One second. Yeah, are you on the broadcast, Omar? If you're on the broadcast, just say hi. Yeah, I like that one right there. I like CRWD. Okay. Hey, Omar, there you are. Yeah, I'm all right. All right. So you buy put here. Let's just say, for argument's sake, that this put costs us $5, okay? $5. That's $5 out of your wallet, okay? But we're here. We're here, okay? And this isn't going to start, the decay on these is like, it's like this. It's not like this, okay? He's a $6 million man. Okay. So, but we're here. We're here. So we buy. Now you're probably thinking, Roger, you just mentioned income strategies and you mentioned buying. That makes no sense. Hold on. I'll show you something. So let's say we go over here and we sell the put right here for $1.75. Okay? And it has 1 week to go. We send weekly expirations. And right here, we sell another put, say for $1.50. And right here, we sell another put for $1 fit here. I can't do this to save my life. Okay, $1.50. Now, how much money did we take in here? We took in $4.50, right? Oh, excuse me, you're right, 475. You're right. You're right, 475, okay? We took in 475, right? Okay. But you're like, well, Roger, that's great, but you spent $5. You're still in the hole 25 cents. I am. But you know how much this option will be worth when this one expires? Remember, about $2. That's $7.25. Bev, you're getting ahead of yourself. You're getting ahead of yourself. Learn to swim before you learn to do the deep dive. So I spent $5. I got out $7.25. Not bad, right? Do you know how often I could find the stock not doing anything? Yes, the buy was a protection. So let's just say right now, hypothetically speaking, the stock somewhere around here goes right? You're completely hedged. This goes up. You're completely hedged. Yeah, I'll repeat it. I'll repeat it in a second. So look, you could do this in an IRA. This is a diagonal. You could do this in an IRA. So again, I buy a put right here in time. This is around October. This is August, right? And I sell puts every week leading up to that. I'm trying to give you the big picture. I haven't really gotten into any details yet, and I'm not going to till we have a live class, which is going to happen later this week or next week. But I want you to understand the strategy. So I anchor myself here, and then I sell options leading to this date. And when I have about 2-3 weeks left here, I liquidate it. And what I lose here, because this expires much later than this, these all lose value at a rate like this. This loses value at a rate like this. So I have a hedged position at all times. And I'm selling puts along the way. Okay? See you later, Ken. Ken knows this. He's a PhD, post-PhD in math. He understands this well. He doesn't need a review course on this. If anything, he understands this really well. So again, I'm going to explain it to you again, okay? So this is GE. This is August. Here. Exactly. This is August. And this is October. I expect the stock to not do anything between August and October. Okay? Nothing. I just don't want it to do anything. I buy for $5 a put here for $5. Okay? For $5. I buy a put. That's my risk, $5. Okay? Okay. So if whatever I do, if this stock drops and goes like this, I have an add the money put. I'm going to sleep very well at night. So I'm long this put. I'm long this put. Okay? I'm long this put. Yes, weekly, Parker. You're selling weekly options. So look. Every week, look. Dollar, look. $1.50, 1, 2, 3, 4, 5. $1.50, 1, 2, 3, 4, 5. $1.50, 1, 2, 3, 4, 5. $1.50. How much money did I just take in? $6, right? How much did I spend? $5. When I liquidate my last one, I don't need a hedge anymore. I'll still be able to sell this for another $1.50. That's $7.50 profit, and I spent $5. I just made 50% return. Now, there's tricks where you can buy really expensive options here compared to the ones that you buy. We haven't gotten into all that fun stuff yet. But I wanted to explain to you the dynamics behind this strategy. It's like that. So this is an anchor. This is an anchor point. Okay. This decays. This is an October option. We're in August. This is an October option. It's going to lose value like this, like this. These expire in 4 days after we get into them, when we sell them. They lose value like this, like this. Literally. How do I enter? Rainbow, you're asking the wrong question. Stop asking a woman to marry you before you even know if she's a woman or not. We're not there yet. You're asking execution questions. You don't even know how to hedge yourself, protect yourself, get out of it, get into it, the ratios. I haven't taught you anything yet. That doesn't start till later in the week, but that's what a diagonal is. So you buy a long-dated option, and then you sell short-dated options leaning into that option. All of the information that you guys are asking me, okay, the strike prices, what happens if it goes up 1 strike? What happens if it goes up 2 strike? What happens if it goes up 5 strike? What happens if it goes down 1 strike? What happens if it goes down 2 strike? What happens if it goes down 4 strikes? Have I explained any of that to you? No. Did I explain to you the ratio of how much you're supposed to take in to how much you're supposed to spend? No. Did I explain to you what the minimum volatility you're supposed to get for the dollars and cents? No. Did I explain to you what strike price you're going to do? No. I haven't explained anything to you, but you're already asking me questions like I have. One step at a time. One step at a time. You're not naked. You're completely 100% hedged. You buy an add the money option here and you're selling an out of the, you're completely hedged. You're completely hedged. Okay. So this is your anchor. This is your anchor. You're long a put. And every week you sell one here, you sell one here, you sell one here, you sell one here, you sell one here. This grossly offsets what you paid for this put, and then you still offset this put to get yourself some money back for it. Okay? Don't ask me any questions because I want you to understand the strategy conceptually, the big picture. Now, what I am doing is I am adding this program. What I wanted to know, actually, what the company wanted me to do was create a new program, a new income program, and call it the weekly ATM machine or something like that. I said, no, we're not going to play that game. Homie, don't play that. I said, we're going to take this program and we're going to put it in weekly cash flow, because weekly cash flow will do all the weekly cash flows that we need to do. So not only do we have credit spreads on weekly cash flow, which you already know what credit spreads are, but we're also going to add diagonals because they're also income strategies. They start off at a debit, but they're income strategies. And they work exceedingly well when we're expecting the market to do nothing, when the market's not doing anything, when a stock is just sleeping and just moving like this. How often can you find the stock? And no, I'm going to give you the full criteria. I haven't given you the stock criteria yet either. You're going to get it all in the course, which we're going to do later this week. I thought we were going to just do it as a Black Friday sale, but so many people asked me to do a replay today that Raleigh and I decided to move the pushback, the Pro Trader dashboard segment till tomorrow, and that's the way Omar trades, Richie trades, and I trade. So we'll do that. We'll do that tomorrow. But you know what Omar was doing when I was communicating with him on this weekend? You know what Omar was doing? He was reading the weekly cash flow getting started guide because he's so excited about doing these trades. I'm not kidding. I'm totally serious. We were figuring out how I was gonna start mentoring him personally, and engaging his trades personally. I do that for a few people. Omar's one of them. I started today, actually. So congrats, Omar. So I wanted you guys to understand this is really important. And sometimes when the market's doing this, like this right here, this is one of the best strategies. There you go, Omar. You're welcome, Omar. Right. This is a really good strategy because it allows you to profit from time decay and implied volatility being completely hedged with a predefined risk. Now, I know that every one of you are now going to ask me the best question. The best question, right? Roger, what's our risk here? At any given time, your risk is the difference between these two strike prices and what you paid for this put. So, Roger, you're telling me if the stock goes to 1,000 or if the stock goes to 0, my risk in the worst case scenario is what I paid for that put minus the spread between that and the option that I sold. Yes, which is going to be one strike price to answer all of your questions. And if you're thinking of doing this yourself, you are going to get so messed up when it's time to manage these positions, you don't even know half of it. So don't even try. All right. That's why we're going to have a lesson on this. Yeah. Yeah. Your risk is what you paid for this put. You could do this in your IRA account because you have a hedged position. You can't lose more than the distance between this strike price and this strike price. And there's only one strike price. And I'll explain all that when we do the class. Okay? Very, very, very important. Okay. Now, why does this strategy work so well? Because you have a predefined risk. Because all of these options are going to decay 5 times faster than this option. This is what a market maker strategy, this is what a market maker would do. Now, Roger, isn't this similar? Roger, isn't this similar to that time spread where how many of you got out of that time spread today on how many of you got out of that time spread today on that HPQ time spread? Yes, yes. How much money did you make? So watch this, folks. How much money did you do? How did you do on that HPQ? Still in it. Oh, my. Well, give me some idea. How much are you guys up on it? Actually, don't give me any idea. I know exactly how much you're up on it. Tell the folks here how much you're up on it. It's nice to make 100%. That's in the pit, by the way. It's nice to make 100%, isn't it? So this is the other side of the coin. Up 800. David says 100 on the sell side, 100 on the call side. I only made 70%. Oh, I'm so sorry. You only made 70%. Oh, poor baby. I'll take 70% twice on every day and twice on Sunday. Yeah, boo, 70%. No, that I'm joking around. That's fantastic. That's what Omar was reading over the weekend. So I'm telling you now, why should you get excited about this? You know how you always asking me, Roger, how come you never do time spreads? How come you never do time spreads with puts? How come you never do time spreads with puts? What do you think a time spread is? It's a diagonal. So far, 42.8%. Very nice. Very nice. I don't see anybody crying. Let's put it that way. Okay. All right. Now, let's take a look at the stocks that are on my watch list today. And then I'm going to go. Oh, David's up only 57%. Raleigh, people are spoiled around here. Unfortunately, I can't hear you, but I could see your expression. We'll get it fixed right after we're off here. We will get this fixed. It worked perfectly from my house. And I've been at my house the last 3 days because Matt had a flu. Today's his first day back. All right. LEGN. This is my short side. Actually, you know, it's interesting. This is a nice stock, and we're pulling right up to the VWAP. We can't break through. That's a nice, it's a nice short, guys. It's a very low risk short right here. Just FYI. The pit will definitely spoil you. That's right, David. Yeah, the pit will spoil you. The last losing trade I think we had officially, I think it was Abbott, no? I don't remember. Maybe. I don't remember. All right. CBZ. Oh, that's a nice short too. Look at that, how it's rejecting the VWAP. Not only are they good shorts, they look like they're setting up for nice shorts too. CBZ and LEGN. Yeah, if this breaks the VWAP, not so good. We would want it to break again to the downside. But volume isn't that high. But that's a nice short. That's a very nice short. AbbVie, yeah, it was AbbVie. All right. ACM. Not today, definitely. It's above the VWAP, but that's also on my short side. I only have 3 stocks on my short side. Now, let me give you stocks to the long side. DVN, General Motors. I still like General Motors. How's our swing trading positions looking, Matt?
Better today.
Do we have chance to profit in some of them?
Yep.
Do you regret not selling any of them early ahead of time?
No, not
All
really.
right, all right. Dollar Tree looks very good. I like Dollar Tree a lot right now. SQM. That looks very good. Looks very good. SQM. I'll answer any questions in a minute. Just post your question. Since I can't hear Raleigh, I'll answer all the questions. I feel really bad, Raleigh. I wish I had a way to hear you without all the echo.
Yeah, no problem whatsoever. And, I don't know, once again, I know Matt can hear me, but I'm
Dollar Tree has
monitoring the
earnings this
chat.
week.
Yep. I'm
Heck,
just
you're
going to
right.
turn my
Dollar
mic
Tree
off.
does have earnings this week. I can't believe it's December 3rd already. Even if I saw that, until you said this week, I still can't believe we're in December. Matt, do we still have Dollar Tree?
No.
Okay. Keep an eye on that, okay? And Raleigh, if you don't mind, just give me some idea of how those small caps did in the chat, if you don't mind. Thank you, sir. Whenever you have a chance, it's no rush. This is a very nice swing trading stock right now. I like this. I like my picks today. I got to be honest. Yeah, everybody could hear him except me, which sucks. JBHT, a little overextended. Great for a day trade, not good for a swing trade. And NUE. That's a very nice long. Look how it bounced off the VWAP and is now starting to come back up. That's a very, very nice long. Okay, a few questions. Somebody asked me about how do I short LEGN? Well, let's take a look. LEGN. I would wait for it to trade again below the VWAP. This has to give out, but here you could do this. Let's say you want to do a short-term trade. You can go right here, 18 days out. You can go and buy the 30 put and sell the 27.50 put. You could do a spread, 250 spread right here. Right there. You're right about Walmart. Walmart's looking great. Walmart's looking good. It was on my list this morning. Walmart's looking good. I like Walmart. Not for a day trade, not a swing trade. And SQM, yeah, SQM it doesn't have a lot of liquidity. This is not an easy stock to get off. All right. All right. Now, with that said, I'm going to give you guys another bite at the apple because we had so many people asking me about it. I'm going to do what I did on Friday again, and this will be the last chance. But I figured it's Cyber Monday. Oh, but before I get there, I want to tell you guys something else. So tomorrow, the segment we were going to have today on day trading live and what I do and what Omar does and Pro Trader Dashboard, we're going to have it tomorrow. One second, I got to check on Apple real quick. Oh, good, good. Starting to make a little money. Good, good, good. I like when a plan comes together. This. So, folks, real quick, a lot of people have actually quite a lot of people have been asking me about computers, what computers to buy, because it's, Cyber Monday, all that. So what I did was this. I posted right here in the main Telegram channel. I have a lot of Telegram channels. Right here. I posted in the main Telegram channel right here. This is what I bought yesterday, last night at 9:30. I got this for myself, for my house. Decided to buy myself another computer. I don't have enough. And if some of them are sold out, here's a list of 5 others that are very similar to what I got. Okay? Yeah, but I'm going to do it tomorrow, Dr. John, because they asked me, because a lot of people are asking, because it's Cyber Monday, so they asked me to do it tomorrow. So I'm going to do that tomorrow. But if you guys are looking for computers, would I post the links here? I don't know if I can. I'll do them one at a time, okay? Yeah, I don't know if these will even take you to the right place. No, that's not the right link. No, that's the wrong link. That's the wrong link. Sorry. Delete that. No, I can't post it. I can't post it. It's in the main Telegram channel, Brendan. I wish I could, but I can't post it. The links are too long. All right. But they are in the main Telegram channel, okay? They are literally right above the last post. So you guys can see them all there. I highly, highly, highly recommend, and I'm not trying to be a pain. I tried. It didn't let me post. So everything I just described to you, all the stuff that I just described to you is going to be part of weekly cash flow. I'm going to talk about weekly cash flow and talk a little more about what's to come. I'll be doing a full class on diagonals. And again, diagonals are the other side of the coin to time spreads. Now, on a scale of 1 to 10, to tell you how much people have been liking my time spreads, well, they've already kind of told you up here, 100%, 50%, 70%. I think we've had 1 or 2 losers on the time spreads, which is fine. But we've had 50% profits, 30% profits, 80% profits, 100% profits. These time spreads can really add up, and they work really, really well. So if you like those, they're in the pit, and this version, the diagonals, are going to be in weekly cash flow. Why? Because I could see no reason for launching a new service if I could just add existing weekly cash flow, weekly cash, right? It works perfectly. Is it a gaming? Yes, they're all gaming computers, and I gave 5 links to all the different computers. So you guys will be completely set. One of those computers will be able to help you out. They're all extremely similar. I think the only difference is RAM. All right.